I hope you're having an amazing day. Welcome to another masterclass. We have a special guest, Brian Bogaert, and this is his, I think, third time or fourth time on this class. And every time he comes on, there's just so much great advice, so much great knowledge that he shares. And I'm excited for this one. He's going to talk about private investing and really give you an overview of the different opportunities that you can use when you're lending out your money. He's going to talk about real estate, going to talk about crypto. It's going to be a really nice overview for all of you. So in the chat room, say welcome to Brian. Just put welcome, Brian. I'll share a little bit about my personal relationship with Brian. I met him about 2 years ago. He came out to one of our events and we just got talking, and he was talking about pre-construction condos. And at the time, our co-founder, Kevin Cochran, he bought like 4 or 5 pre-construction condos in Toronto. It's something that I wanted to learn more about. I wanted to invest in them, but I was a little bit terrified. I was honestly a little bit scared. I wasn't sure how it works. What are the risks? How do you find a good investment? So Brian kind of took me under his wing. He's got this kind of great one-on-one coaching program, kind of similar to Enriched Academy, but it's more focused on these private investments in condos. So I went through the coaching with Brian. It was a couple months. As soon as I was done that coaching program, I just had so much confidence and excitement that immediately I bought 2 pre-construction condos, one in Yorkdale and one in Calgary, Alberta, using the techniques and the framework that Brian shared with me. And they've been great investments. They're not built yet, but you could see the appreciation on both of them. So I just want to say, Brian, thank you for that. And thank you for joining us and sharing your wisdom with all of us here.
It's so great to be back, Arian. Always love to come and talk to the Enriched Academy crowds. This is a group of people that understand that investing in their future is so incredibly important, and not just plunking their money in the bank and, hoping that 30 years from now they're going to be able to retire. So happy and privileged to be back and chat even more about private investing. So we're going to touch on pre-cons, but I'm going to talk about some other goodies that I get involved with as well. So you tell me when you're ready to rock and roll, Arian, and we'll get into the details. I got a lot of stuff to share today.
Let's do it, Brian. The stage is all yours, my friend, and let's get started.
Okay, so welcome everybody. One thing I'm going to ask, we will have some interactions along the way when I ask questions, so feel free to type stuff in the chat. As far as questions go, we'll deal with those at the end. So the best thing to do is type it in the chat, or if you want to write it down yourself and then type it in the chat later. But if you type it in the chat, that way we have a record of it and we'll be able to deal with it at the end of the presentation. So feel free to drop any questions you have along the way. We'll make sure we get to all of them. But I'm going to get started with the main information that I want to go through today. And exactly as this says here, so Brian Bogaert, my company is Next Level Success Coaching that I've had for 8 years now. And what we're going to talk about today is how do you get started in private investing? And I'm going to share with you my actual results that some of my clients have got. So everything that I share with you today is real numbers and real situations. None of it is made up or exaggerated. This is exactly the results that I've been creating for myself for the last almost 2 decades. All right, so what we are going to do now is move into the slides. So private investing. Now, this is a topic that has been gaining a lot of popularity and acceptance over the last little while. And, maybe some of you have participated in private investing. If you have, just drop a little "I've gone private" in the chat. How many of you have participated in private investments? And for the rest of you, you might be going, I'm not even sure what private investments are. I'm going to cover that in a couple of minutes. But the question right now is, should you be looking at this for your portfolio as well as some of the things that you're investing in with your bank or your financial advisor? Because here's some information that you're probably never going to hear from your bank or your advisor. So private investments versus public investments. That's what I'm sort of talking about here. If you go back about a decade and you were to go and investigate these multi-billion-dollar pension funds, like the pension funds that are out there for doctors, nurses, teachers, firefighters, all these different union pensions that you hear about, okay? We all know these things. They're massive investment accounts, and there's some really big brain people that manage these things. Because listen, if you work as a doctor or a nurse for 30 years, and then when you get to the end of your career, there's no pension, you're going to be pretty ticked. Okay, so these guys and gals have an absolute agenda that makes sure that they're going to be able to cover people's pensions in the future. Okay, so, they know what they're doing is what I'm saying. Now, the interesting thing is, if you go back about 10 to 15 years ago and you look at the percentage of these pension funds that were being invested in private investments, it was around 5 to 10% of the overall portfolio. And more like 90 to 95% was being invested in what we call public investments, stocks, bonds, mutual funds, ETFs, that kind of thing. Okay, so 10 to 15 years ago, it was about a 90 to 10 ratio. But now, and this is all public knowledge, by the way, you can Google this stuff and you might have to do a little bit of digging, but you can find out because these big pension funds have to, right? They have to provide this information publicly. They get highly scrutinized. Well, if you were to investigate today, what percentage of these multi-billion-dollar pension funds is invested in private investments now? The numbers are closer to 50% of the portfolio. So that means they went from 5 to 10% to like 5 to 10 times that amount is now being invested in private investments. And the amount that was being invested in public stocks, bonds, and mutual funds has been cut in half, okay? And this is super important to think about when you're thinking about your own portfolio. Now, the question was put to these giant pension fund managers, why? What made you switch? And their answer was so illuminating. We can get higher returns with less risk. And that's why they were choosing to put more and more and more of doctors, nurses, teachers, firefighters, police, their money into private investments. Okay, so like I said, this is not what you're going to hear from your bank or your advisor when you go and have a meeting with them. And the main reason for that is they don't sell private investments largely. Okay, this is something you have to go and do on your own. But as I said in that opening question, maybe you should be starting to consider this. If it's good enough for these gigantic pension funds with these big brain managers doing it, it might be something that you want to consider. So what is involved in private investing? So this is basically any of the types of investments that you hear about that are not stocks, bonds, ETFs, mutual funds, GICs, that kind of thing. So some sort of major categories that I've invested in include real estate, and there's tons of different ways to invest in real estate. It's not just buy and hold or flipping like you see on TV. Private lending, which I'm going to give an example of later on in this chat. And then there's crypto. Now, the interesting thing with crypto is as crypto starts to move more mainstream, now we are starting to see ETFs and crypto mutual funds popping up. So crypto is actually in both worlds. Now, the reality is all of these are in both worlds. You can invest in real estate with your bank through something like a REIT. Okay, private lending, that's a little tougher to do with your bank, but crypto, there's both options. When I first started investing in crypto, I was buying the actual coins. That's a real private investment. But now there's other options, which I've also taken advantage of. Okay, so that's going to be what I talk about today is these sort of categories, and know that this is where the bulk of my investing is going on, is in these different types of private investments, and I've been doing it for a couple of decades now. So that's what I'm going to get into here. So you may yourself have even contemplated this or done it, and you may have read about a lot of people doing this. Millions upon millions of people in the Western world have been abandoning their banks and their advisors for these robo-investors or do-it-yourself, self-directed investing companies like Wealthsimple, which is, I know I've worked with people from Enriched Academy before, and a lot of people move over to Wealthsimple once they start to learn a lot of the foundational pieces that Enriched Academy gives. Robinhood is a huge one in the States. You've probably heard stuff about this. Now, the first thing I'm going to say is the fact that people are taking responsibility for their money and moving it over to these robo-advisors or do-it-yourself investing, I think that's fantastic. I love that. You want to take it back more into your control, your responsibility, and stop paying these huge, crazy fees to the banks just to get, not so very good returns. However, here's the thing. For the most part, you're still, unless you're working with someone like myself or Enriched Academy, you're still not learning how to invest. So millions of people are switching to Wealthsimple or Robinhood, but they don't know anything more about investing than they did when they were working with their bank or their financial advisor. So all you've really done is you've just switched masters. You're just making a different master rich. Okay, you were making the banks rich before, now you're making Wealthsimple or Robinhood rich. So type in the chat if any of you have already switched over or are contemplating switching over to something like a Wealthsimple or even a self-directed trading account with your own bank. I love to see that when people take responsibility. And just a reminder, you still have to become educated and empowered about investing. So at this point, Aaron gave a little bit of an introduction, but some of you might be asking, like, who is this guy? Okay, and I got my Morpheus t-shirt on today with the red pill and the blue pill. That's sort of my moniker, if you were, of how I look at myself, and it's based on my own journey. I love the Matrix movies. I started off as Mr. Anderson, knowing that I wanted more of the life, but not knowing where it was. Then my Morpheus showed up in my life, got me into real estate investing, and I became Neo. I was able to move in and out of the financial matrix when I wanted to. And then finally, I opened up my own coaching business after a lot of people were asking me, Brian, why are you not teaching people these things you've learned over the last 15 years? So now I've become Morpheus myself. Very lucky to have great foundations with my parents. Started in real estate investing in 2004. Some of my next level successes, I retired from the rat race at 37. Then I was able to develop a net worth of $1 million and become fully financially free. And now I'm well on my way to my next goal of $10 million. The reason that I do this is I just love and value freedom. And I want to take as many people with me as possible into this realm of financial freedom, because then I got more people to play with, right? And invest with and create. I'm actually creating a community called the Financial Freedom Fighters, of those of us that are passionate about creating more freedom and bringing other people with us. So that's kind of me. Some of the things that I love to do, I love to travel. This is me in Iceland. It was a very windy day to get to this waterfall. That's why I'm only kind of half smiling. And then the other thing is, even though I'm an investor and I'm what's called a value investor, I'm not a huge risk taker, I also believe in living my life now. So this is my Tesla Model S. It was my dream car. And instead of waiting 25 years like my grandfather did, only to drive his dream car for 6 months and then pass away, I got my dream car now. And I did it. I actually got it 3 years ago. I did it through an investment. I'm not paying for my Tesla out of my pocket. An investment is paying for it. You want to learn more about how I did that, we can jump on a call. I'll talk a little bit more about that at the end. But so that's kind of what I'm all about. I'm still, very cautious with my money, and I'm not a spendthrift person, but I also believe in living my life now. So one thing I want to make really clear is that I believe in the financial world, there's a conflict of interest when you go to meet with an advisor and they're supposed to be educating you, but immediately they want to try to sell you an investment. Well, how can they remain objective and unbiased with you if they're trying to push the products that they have? And this is why so many people say to me that they just feel like they're being sold to when they go to their bank or meet with their financial advisor. And this is the reason why. So I consciously made a decision not to promote any investments in any of my coaching programs. Okay, the example Arian gave, we went through how to become a pre-construction investor, but I never promoted any pre-con projects to him. I introduced him to realtors that he was able to work with to do that. And I wasn't making commissions on any of that. Okay. So for me, it's about teaching you. It's about educating and empowering you on how to become an investor, my investing process. That then gives you that confidence that Arian mentioned to overcome the fear that stops so many people from investing and moving closer to freedom. So that is my why, my purpose, and what I'm all about. A huge topic that I cover with people is money mindset. I could literally spend 2 hours just talking about this with all of you. I want to touch on it today. Okay, so as it says at the bottom, all the tips and strategies in the world won't help if your money mindset is currently scarcity and fear. It won't matter what I show you or what I talk to you about. Your mindset is going to kick in because it's operating in the background, mostly unconscious to you based on your experiences, your beliefs, your childhood, your influences, all this sort of stuff. So one of the first things we have to work on is your mindset. Okay, as an example, when I started getting into pre-cons myself back 7-8 years ago, people said I was nuts. They said the Toronto market was overdone. I was going to lose all this money, right? And people were warning me, don't do it, Brian. And it was all about fear and scarcity. And then I've bought 9 pre-construction condos in that time period. Then when I started selling them and walking away with profits of $150,000, $200,000, $250,000 after 5 years, people are like, oh, you're so lucky that you got in when you did. And now they're telling me the same thing. Oh, you're crazy to keep going though. It's overdone, man. We're in a bubble. Okay. That's when people are coming from a mindset of scarcity and fear. And I'm not blaming them. I totally understand. I used to operate from a mindset like that when I was younger as well. But now my mindset is about growth and abundance. I'm still very careful, and I'm going to show you how I go into investing. But I am totally focused on how do I grow what I have? How do I create more abundance for myself and the people that matter to me? Whereas most people I find are in self-sabotaging mode. And even when you get a great opportunity, you'll find a way to walk away or screw it up. Okay? So if you take nothing away from this presentation, take this away. Sit down with your partner, with your family, with your best friend, and ask them, what do you think my money mindset is? Do you think that I am about growth and abundance, or am I mostly operating from scarcity and fear? Start paying attention to the words that you use, especially when people talk about things like investing or real estate or stuff like that. What are the words that automatically bubble up to the surface in your mind? Is it scarcity and fear, or is it about growth and abundance? Are you happy and excited and hopeful about these things, or just like, oh no, I wouldn't touch that with a 10-foot pole? So if you want right now in the chat, just drop a word, or two of what you think your money mindset is. Is it growth? Is it fear? Is it bankruptcy? Is it investing, right? What sort of mindset do you have? And we'll take a look at some of those near the end. One of the ways that I am able to focus on growth and abundance is because I understand that with all types of investments, I have to learn to identify and navigate risk. And like I said before, I'm a very cautious investor. I'm very conservative. I'm not wildly speculating on different things and gambling, okay? It's up to you as an investor to learn how to navigate risk. It's your responsibility. It's not the responsibility of the people putting on the investment like a lot of people think, and then they go to blame them afterwards. And this is true of all investments, even what your bank and advisor might be offering you. A lot of people believe, oh, they have my best interests in mind. It's been shown that the banks are there to make money for their shareholders, not to look after their individual clients. That's not their focus. Yes, it still can happen, but their focus is on expanding and growing their business for their shareholders. Okay? So it's your responsibility to identify and manage risk. So how do we do that? The honest truth is, most Canadians and Americans that I speak to have no clue how to identify and navigate risk. You might have heard some things in the financial community about diversification and all this, but then every time the stock market goes down, all the stuff that you're diversified in goes down. So is that really navigating risk? I would say it's not. So one of the things that I learned from my mentors, and now it's in all of the courses and programs that I do, is the 3 P's of protection. And those include, in order of importance, protection of capital, which I'm going to speak more about in a second, protection of ROI, so protecting your returns. If they say you're going to make 9%, I want to make 9%, not 3%, and then 11, and then 14, and then -2. That's too much volatility for me. And then finally, protection of exit strategy. I want to know that I can get my money out when I'm supposed to be able to get it out, and what it's going to cost me and what the process is going to be. And I want to understand that before I sign on the dotted line. So these are the 3 levels of protection. Again, it would take me about 3 hours to go through all of these in detail. I do them in my different programs and with people I work with, but today I want to give you a quick intro to protection of capital and an example so you can take that away. Because again, those of you who are looking to take something away from this presentation, this is one of those things that you're going to take away, because this is going to change you from being a gambler or a speculator into a full-fledged investor when you learn how to protect capital. So some of you guys might be fairly familiar with this guy, Mr. Warren Buffett. Perhaps the most well-known, richest investor in history. This guy has created hundreds of billions, if not trillions at this point, of dollars for himself, his family, and his investors in Berkshire Hathaway. Okay? And he was not born with a silver spoon in his mouth into a rich family. All right? This is a totally self-generated guy. And here's what I find super interesting. So Warren Buffett, while going out and creating hundreds of billions of dollars, his rule number 1 for investing is never lose money. And rule number 2 is never forget rule number 1. So I have adopted this. This is what I mean about being a conservative investor. I implement the 3 levels of protection before I sign on the dotted line, especially protection of capital. And then I put up my money, I invest, and I wait to get my returns. Okay? And protection of capital is actually quite expected and easier, relatively speaking, to get in private investing when you know how and what you're doing. Okay? So that's why I became a private investor and left the world of stocks and bonds and mutual funds. I don't invest in that stuff anymore. Okay? Because I saw that I could make way higher returns, just like those people that were, or those fund managers for the pension funds. Just like they saw, I could make higher returns and I could lower my risk through private investing. And that's why I went all the way in on that. And now I teach other people about it. So I want to give you a behind the curtain example of something that I actually did. And this was a private lending situation. Okay. Drop in the chat while I describe this if you yourself have ever taken part in private lending. So really fast story. Somebody that I knew called me up and needed money fast. Long story short, his credit, not so good. He'd gotten into some spending problems, but he was in the middle of closing a real estate deal. And all of a sudden his bank, because his credit had gone down, was like, sorry, we're not going to be able to give you a mortgage. Not like we promised because of your credit. So he was scrambling, and the only other offer he could get from a different private lender was $300,000 at 30% for 1 year. Those of you who can do math quick, how much is that in interest? Yeah, 90 grand he was going to pay in interest on 1 year. No thanks. But the bank that he'd been working with said, if you can come up with an additional 50K, which was them protecting their capital, they were making him come up with more money to make it a safer investment for them. They would be willing to give him bank financing for $250 at 7%. That was way better than $300K at 30%. But he needed to come up with 50K, and he had 2 weeks to do it, literally. So he called me and I said, okay, how about I lend you the 50K, we write it up as a private deal, and I'll do 20% on that for 1 year. And he said, yes, please. And he even offered me a $5,000 setup fee in order to make that happen in the 2 weeks. So I qualified him just like a bank would. Okay, he paid the legal on setting that up, which is very typical in private lending. And this is the part of protection of capital. I didn't just give him the money. Okay, my lawyer registered this loan as a second mortgage on a condo that he owned that we evaluated ahead of time and made sure that it had more than $50,000 worth of equity in it. Okay, and it was around 80,000. So I knew going into this deal that if he didn't pay me back, or he disappeared or something happened, I would take over his condo and not only get my 50K back, but I actually would get more. I would turn around and sell the condo and walk away with about 70 to 80K, even after fees. That's what protection of capital looks like. And that's what banks have been doing to you for decades. When they give mortgages, they protect their capital. Have you ever heard of a conversation like this when you go to buy stocks in Tesla or Lululemon or get a mutual fund or any of that? No, because this sort of thing is not being offered by banks and financial advisors. They are not interested in helping you protect your capital because, quite honestly, they don't really care if it goes up or down. They're making their fees and commissions regardless. So there's no incentive for them. Okay? So in the end on this, my money was protected, less risky than the usual types of investments that you're hearing about, but I was making 30% on my money. I created $15,000 in 1 year on a $50,000 loan. And I did about 5 days of work to set that up. After that, I was just cashing checks for a year. Okay? That's the world of private investing. In this case, private lending. Now, this was not my first rodeo. I have been investing privately for 17 years plus. Now, I'll be honest, I had mixed success in the first few years because I was experimenting. I had no formal process, and I didn't understand the 3 Ps. Nobody had taught me that. Then, through the mentors that I made, my Morpheuses, I learned about the 3 Ps. I started implementing that, and over the last 10 years, I have been consistently getting double-digit returns with very, very low risk, as close to zero as you can possibly get. All investments have some risk, but I mitigate that down to zero as much as humanly possible. Now, some of you are going to be like, how can I learn more about this 3 Ps? Go ahead and try to Google it. All right. I challenge you to try to find information about this other than just the diversification and dollar cost averaging and the stuff you're going to hear about already. This is not well-known information. This is stuff that the wealthy have been using for centuries to protect their money and protect their wealth. And it's not shared commonly, but that's something I'm trying to change. Okay. Now, remember, we all start out with our first private investment. You can too, with support from someone who has created the results that you desire. That's how I got started. Now, private lending is not for everybody. There is some upfront due diligence to be done. You should be flexible on extending the terms, because if that person was in trouble with their credit before, they might still be in trouble with their credit. It is taxed as income, so you can pay quite a bit of tax on that, all right? So for those of you who are in growth mode, it might not be the best option right now, maybe later on when you're looking to supplement your cash flow. It's really great for those looking to replace work income and implement more freedom in their lives, okay? But here's the thing. Whether it be private lending or any other type of investment, it's not about it being a good investment. Is it a good investment for you? Does it fit your goals and your investment criteria? Which, after mindset, is the next piece that I cover in all of the coaching I do, helping you figure out what are your future goals and your investment criteria. That's going to help you decide what kind of investing you should be doing. Now, I always believe in the good, the bad, and the ugly. So what can go wrong with private lending? You might have the wrong borrower. Okay, there's a reason why banks have so many rules to qualify borrowers, and you need to do that exact same thing. This is your risk, the borrower, and the chance of them defaulting. Now, anybody can make mistakes and have bad credit, like this guy that I knew did. Some just happen to fall into the cracks, like self-employed people. Banks, it's been very hard for them to get mortgages over the last few years, and I suspect it's going to get even harder over the next few years as we come out of the pandemic. But a lot of other people just have bad money habits, and you should not be lending them money. Even if you can get collateral, it's going to be a nightmare. You need to be looking for a pattern of responsible money management and protect your capital by getting collateral. That's another problem, is not enough collateral or protection. There's a reason why banks require 20% down for mortgages, so they know that the value of the collateral that they're getting is more than the loan that they are giving. Let that one sink in for a second. Okay, you need to know, just like I loaned out 50, but I knew that there was about 75 to 80 of equity in this guy's condo. That's how I understood that the value of the collateral was more than what I was loaning. So you have to do appraisals and lien searches and these types of things on whatever the collateral is, so you absolutely understand the value. And then lastly is not understanding the exit strategy, the third level of protection. What if the borrower defaults? A lot of people wind up working with a partner on this, and then there's a default, and then it falls in their lap. Who's going to handle that? Who's going to wind up going through the process of acquiring the collateral, which could go to court and all kinds of different things? How much money and time will this involve? You need to know before you loan, and don't just rely on trust or a sad story. I have a story about a dentist who called me because of exactly this. He'd done a loan, didn't know what he was doing, and now was having to fly to New Brunswick to appear in court to get back his money. And he was a busy dentist. He didn't have time for this. So he called me freaking out. What do I do about this? And I helped him through the process. If you're going to do private lending, you need to be a problem solver who is calm, patient, and flexible. If you're not, then private lending is probably not for you, and you should be doing a different type of investing. That's why it's so important to understand your goals and your criteria. Okay? Now, apart from private lending, I also teach or mentor, and it's because I've done these things. I'm never showing anybody something that I myself haven't done and had success with. So real estate, all sorts of different types, buy and hold, development, reno and flip. Real estate is by far my favorite form of investing for a lot of different reasons. And that includes pre-con condo investing, like Arian mentioned. At this point, I've purchased 9 units. 2 of them have closed. 3 of them are in occupancy. 1.5 got canceled, which I'll talk about in a minute, and the rest are in different stages of development. My average rate of return on these pre-con condos has been 50% plus per year, every year for up to 5 to 6 years. Those numbers are not exaggerated. That is honestly the truth. And like I said before, everybody told me I was nuts when I got into pre-cons. Private funds, pools, mix, utilizing RRSP, TFSA, RESPs. I do this. I talk to people about this. I average about 10 to 15% ROI on mine. And then, of course, the world of crypto, which has become my second favorite investing option over the last few years. And I'll talk a little bit more about that in a minute. So all of these subjects are covered in a group program that I do called the Certified Secure Investor Program. I talk about all these different types of investing. I'm also developing specialized courses for each one. So I have a specialized course on pre-cons. I'm doing another one for crypto, another one for private lending. It's kind of like you get your undergraduate degree and then you go to the master's courses in the different areas that are of most interest to you. So here's real results for a client of mine, Dave. He did my program the very first time I ran it. And much like Arian, this built his confidence and showed him how to find what I call unicorn pre-con projects. There's hundreds of pre-con projects. Most of them I have no interest in. The top 5%, I call them unicorn projects. Those are the ones that I'm interested in. And I helped Arian come up with his criteria for finding those. So Dave wound up purchasing 2 units in Midtown Toronto, right around Yonge and Eglinton. The current selling price of those projects, and they're still 6 months away from closing, so they're probably going to continue to go up. If he was to sell those right now, his profit for each unit is between 250 and 300K gross profit on each unit. Okay, that works out to be 70% per year, his returns. And he doesn't even have them up for sale yet. He might keep them. He might put them up for sale in the new year after they close. Okay, that's his different options and the kind of numbers that he's been seeing. I also have a unit in one of these projects, and mine has those same types of numbers. Okay, Dave was able to create this because he chose to learn from a successful investor, somebody who had already created the results that he was looking to achieve, rather than the horror stories you hear of people who wind up losing their shirt because they don't know what they're doing. So what can go wrong? Okay, pre-construction also can have problems with it. And as I just said, there are people all the time, you see them on the news, that lose their shirts. So I mentioned this earlier, 1.5 units. I actually had 2 units, but the second one was with a partner. So we had 2 units together on a project that went nowhere in 4 years and has now been canceled. Okay, That's pretty scary, right? Money's been tied up for 4 years. Now you're wondering if you're going to get it back. That's the kind of things that can go wrong, okay? For whatever reason, and they had a whole list of reasons why the project never got off the ground. So what now? Well, as it turns out, because of the work we did up front, our research, we knew we were working with a reputable builder who had a track record and had experience. We got our money back, plus interest. Okay, so we got all of our down payment back, plus about 3% per year. Not what I was hoping for, but still better than a kick in the pants with a frozen muckluck. Okay, that made me happy to at least get my money back and a little bit of interest. Protection of capital. People will tell you, oh, your deposit is guaranteed when you do one of these. It's not, all right? It's only guaranteed if you have a reputable builder that knows what they're doing. If you have a builder and a lawyer that are potentially in cahoots, they can wind up draining all of the investors' money, then declaring bankruptcy and disappearing. It happens every other month. You read stories about it in the media, okay? There are shady builders, lack of paperwork, shoddy work. People wind up with a condo that they can't even live in. It's horrible. You can't sell it. Okay. So I love pre-cons, but it's a bit of an advanced form of investing. You have to know what you're doing and be able to do that research up front. You got to work with professionals, understand the contracts, and research the builders before you invest. All right. Otherwise, it could be 5 years of pain. So I often get the question, but Brian, where do you find these opportunities? I don't know anything about any private investments. I never hear about these. Well, the honest truth is they're everywhere, okay? I see signs about these all the time because I know what to look for. I've also built up a team of partners and experts that can share these projects with me. Not a week goes by that I don't get 2 or 3 investment opportunities coming into my inbox because of my team of partners that I work with. And I promise you have people in your network right now that are doing private investments. And some of you on this call probably are doing them and know other people that are doing them. So you need to start having conversations about this. You need to start asking, hey, have you ever done any private investments, any real estate or crypto? You're probably going to find out that you actually have a network and somebody in your network is actually pretty good at this and might be willing to mentor you. Okay. Now for me, I do introduce my clients to my team of people so they can start working with them. You may need to find your own. It might take a little while. It's like finding friends or a romantic partner. It takes a little while, but it's so worth it in the end when you find the right people. So I promise you, there are private investments going on all around you. Okay. They're not that hard to find. Now I say no to dozens and dozens of them all the time. So what about crypto? Well, I've been learning and investing in crypto with a team for about 4 years. And then just before, well, right around the time the pandemic kicked off, I got started in doing it on my own and buying the coins. Now, I have been very fortunate. As a lot of you know, crypto was going pretty cuckoo in the end of 2020 and beginning of 2021. So most of my returns in less than a year were in the 500 to 700% range. Again, not exaggerated numbers. Now, those went down a little bit when crypto went down, but now they're starting to chunk back up again, okay? And crypto has huge volatility. This is not for the faint of heart. It is very challenging to implement the 3 Ps in the world of crypto. I would not recommend it to new starting out investors because of the volatility, and especially people who suffer from anxiety and are constantly watching the news. Yeah, crypto may not be the best fit for you. It's actually doesn't really fit into my wheelhouse of the kind of investments I typically do, but because of the potential for the returns, I'm willing to do it for a couple of years, really focus on growth, and then get out. Okay, much like what happened in the internet boom in the 90s. Again, though, investing should be driven by your goals. That's what determines your choices. Bitcoin, real estate, lending, it depends on you and what you're trying to accomplish and your investment criteria. If you're not doing this, then you're really gambling or speculating. Okay, it's about creating a plan and sticking to that plan, not just, hey, I heard about this good investment. No, right? Those people are often selling an investment and making a commission on it. And please, once you get into investing, stop reading the headlines. Okay, I can tell you right now, having done this for almost 2 decades, none of the experts know what will happen next. I don't know what's going to happen next. That's why I'm following the 3 levels of protection. Investors follow research, not media trends. A great example of this, if you went back and looked at the headlines for the real estate market from March 2020, after the pandemic kicked off until about now, almost all of the headlines have been doomsday, the sky is falling, it's a bubble. Yet, how has real estate done in Canada over the last year and a half in the US? It's been one of the most phenomenal investment opportunities, second only really to what's been going on in the world of crypto. But all of the headlines have been negative, okay? Almost all of them, or at least very fear and scarcity oriented. So we actually cover this in the course. How do you get through the headlines and get to the research? And how do you, again, determine your goals and investment criteria, create a plan, and then executing? Real estate, real investing is not what you see on TV. It's boring. Nobody would watch it, okay? So I like to show this slide because for a lot of people, you're like, man, this is exciting. I really want to get into this, but I'm going to wait. Okay, well, this is compound interest. Einstein called the ninth wonder of the world. But with compound interest, time is involved. So this is kind of a little graphic that shows the future. If you want to be financially free in the future, you're probably going to have in the neighborhood of $3 to $5 million in net worth. People who have 1 to 2, probably semi-retired, maybe still doing some work on the side. If you have less than $1 million, you will never be able to stop working. They're going to take you out of your job feet first. And then anything less than that is you're in crisis mode where you're barely making it by. And unfortunately, there's a large percentage of Canadians that are in the crisis boat, which is exactly why they went into total panic mode when the pandemic hit. Because they didn't have enough money to get through a couple of months of no savings whatsoever. Okay, so the longer you wait, the harder it is to move up a line, right? Because this takes time in order to build your investment portfolio. So the question is, which line are you currently on? What's your plan to jump a line, and how long are you going to wait? Because you're getting further and further away from those freedom lines the longer you wait to do something. So again, you want to take something away from this, do something. Sit down this weekend, create your plan, work with the people that you trust and believe in, and start investing. Okay? I started 17 years ago. I'm so happy that I did. And I'm still in the process, right? I'm on the green line, but there's still more that I want to do. It takes time. And I understand it's a journey. Okay, it's multiple steps. It's going to feel really hard right now for some of you. Some of you have gotten started a little bit. You're starting to build some confidence. And that's one of the things it requires to go on this investment journey. You have to have some confidence and some hope and some belief that you can actually make this happen. That comes with education and empowerment. Too many people get started in investment, don't know what they're doing. Along the way, you're going to have to learn skills and tips from people who have been there before. And if you're really lucky, like I was 17 years ago, a mentor appears in your life just when you need them and helps you get over some of these things, especially with the mindset aspect of things. So we're going to wrap this up. We're going to see about some questions. Here's what I have for you right now. Do you know how to utilize the 3 levels of protection to reduce your chances of losing money? What would it be worth to you to learn how to protect your $50, $100, $150,000 that you're starting to invest with and follow Warren Buffett's rule number 1 for investing? What would you pay to learn that? The opportunity here is learning a repeatable process to double your money every 5 to 7 years. These are the results I have been creating for myself and my clients. And that's with conservative 10 to 20% ROI per year from somebody who is currently doing it and teaches others, who's actually getting better returns, but I like to be conservative. If you made 30 or 40, I'm sure you wouldn't be upset with me, but I will show you how to consistently create 10 to 20% per year. So what does that look like? Well, I have a program called the Certified Secure Investor Program. It's going to be starting up again in October. All right. It's about upgrading your money mindset for abundance. It's about knowing exactly what investments match your goals and investment criteria. It's about reducing risk with the 3 levels of protection for life. You get to use this over and over and over again on all of the investments you do. And then it's about gaining experience and confidence. The last few sessions in the program, we actually go through real live case studies, and everybody will get a chance to practice on 2 real live investments going through the things that I've taught you. But these investments have already passed. You couldn't invest in them even if you wanted to. As I said, I am not promoting investments. I'm teaching you how to become an investor. Okay, so this is what I'm up to right now. I want you to get value out of what we did today. I hope you got some takeaways. And for some of you, you're like, yeah, I want to do something, but I know I need a mentor. I want to learn. I want to start doing this right. So the Certified Secure Investor Program will start this month. Today's the 30th, but in October, okay? It's a maximum 12 qualified people per course. You're going to have a call with me, and I'm going to show you how to do that in a second in order to get qualified to be in the program, because I only want people that are actually going to benefit from this. It's 10 weekly live, and they are all recorded calls with me, plus online modules to work through so you're implementing what you're learning along the way. Everybody in the program gets a special bonus one-on-one money mindset call with me to get through that mindset stuff. There's a community of like-minded investors for collaborating and learning and building your own team and partners to invest with. It's about being mentored by a successful investor. And because I love the Enriched Academy community, and Arian says, Brian, make a special deal for these guys. And I'm not one of these people that like starts it, oh, the program is $30,000, and then I'm going to slowly cut it down over and over and over again. I just find that to be a lot of nonsense. So I'm just giving you the special price right off the bat. Okay, the regular price of this course is $39.97, so $3,997 plus HST. But everybody who comes through this call is going to get 20% off of that program or that price. So it winds up being about $3,100 and change plus HST to take part in this. This is the last time I'm going to run this program this year, and maybe the last time that it's at this price. So essentially, you know, in this slide here, which I'm going to leave up, if you want to connect with me, feel free to send me an email. Connect with me on Facebook or LinkedIn. And right now in the chat, I am going to drop a link that you can do in order to book a call with me. So I think this is how I do this. Nope, that's not it. Arian, how do I do a chat? Stop screen sharing, first of all. Play local video. Nope.
Hey. Just at the very bottom, the right-hand side, there's...
Oh, that's why. I just had to scroll through. Okay. So
yeah, just gotta scroll down.
Okay. At the very bottom, I'm not seeing an option for me to do it.
You want to just send it to me and I can put it in there?
Yeah. So if I do a private chat to you?
Yep.
Okay.
And everyone, yeah, Brian, thanks so much for that. That was awesome.
If you drop, so I just sent you that link. If you drop that in the chat, it automatically goes to my calendar, and then people can book a 30-minute call with me over the next couple of weeks. Did you get it?
I got it. It is in the chat.
Perfect. Awesome. Okay, let's go look and see if we've got any questions here, if we still have a couple more minutes. You can't invest money without, absolutely. You got to learn how to build initial wealth in order to get investing, and that's something that you need to learn. What about private lending pool companies for starting on private investors, i.e. Lending Loop? Would you recommend them? I don't know Lending Loop particularly. So here's the thing with working with those companies. You still have to do your research on that company, just like I was doing research on the different builders, because not all of them are created equal. There's some great companies that I've worked with in the past that actually have people's best interests at heart, but a lot of them don't. They're just there to make a few bucks for themselves. So there's some fundamental questions that you can ask in order to decide, hey, is this a company I should be working with? And find out, what if things go wrong? Do you handle that and help me with that? Or is it totally my responsibility, like the dentist found out the hard way? What's your opinion of using a biz like Olympia Trust instead of self-directed private lending? So Olympia Trust, actually, they're just like a bank that specializes in these. I have accounts with Olympia Trust. So I have self-directed RRSP and TFSA accounts with Olympia Trust. So they're kind of like the way to get into these things. They don't actually have any investments available. They're the vehicle that you're going to use to start to get into the world of private investing. Okay, so you still have to go out and find the different companies for the investments. Olympia Trust doesn't actually provide that. Okay, they can't by law because they're kind of like, it's like if I go to TD and open a self-directed account, I still have to go pick the investments that I'm going to invest in. Okay, have you used RSPs to invest? You bet I have. I've done mix, I've done real estate investing, and most recently, I've started using my TFSA and RRSP to do crypto. Because here in Canada, we're super lucky. We've had some ETFs and mutual funds that have been approved that you can now use your RRSP and TFSA funds for. Whereas in the US, they've got about a dozen of them that are waiting to get approved, so no Americans can use that yet. So we Canadians have, and I've been loading up on those over the last few months while crypto was on sale. So yes, and that is something that I teach about and talk about is, how do I start to use registered funds, RRSPs, TFSAs, RESPs? How do you make yourself open to these deals? That's about building up that network of partners. Okay. So again, I have a lot of people that I work with. You're going to wind up building your own team. It takes a little bit of time, but it pays off. Okay. And the first thing is just start talking about it. I know summer's over, so the backyard barbecues, but Thanksgiving, right? When everybody's talking about the weather and what's in the news, ask around the Thanksgiving table, has anybody ever done any private investing like real estate or crypto? And you might get some funny looks, but after dinner, you might wind up in a fantastic conversation with a family member or a friend that you had no idea was doing private investing because people don't talk about this stuff. Okay. Just did my first private lending deal, Ali. Nice. That's what I like to hear about. Fantastic. Good for you. And I do see some names that I recognize in here. Lack of knowledge, thus fear. Absolutely. That's the way to eliminate fear is through education and empowerment. Absolutely. Just need clear direction on how and where to start with private lending. That's the best place to start. I'm telling you, you want to take away for after this call, sit down this weekend and start with your goals. So an exercise that I do with my clients and I do myself every year is what are my 1, my 5, and my 10-year goals. Okay. And then I work backwards. So my 10-year goals need to line up with my 5-year goals, but I see the steps I need to take to get there. And my 1-year goals need to line up with my 5-year goals, and I need to see the steps I'm going to take to get there. That's what dictates what I need to be investing in today to achieve my 1-year goals, which line up with my 5-year goals. That's how you get that clear direction. And if 5 and 10 years is too far to imagine, then do 1, 3, and 5. Okay, get started with that. That's an exercise that you can do this weekend while everybody else is, reading the latest COVID stats or watching Dancing with the Stars. Sit down with your partner or someone that you invest with, a family member, and start looking at those goals. That's going to tell you, oh, you know what? Crypto is probably a good idea for me to learn more about. Or no, not a good fit. Let's look at real estate investing, private lending, something else. Fear, thinking about it. You got to move from thinking to taking action. Okay. I get it. I absolutely understand. Quick funny story. The very first real estate deal I did with my Morpheus, who was the guy I sat beside at work for 4 years and had no idea he was doing real estate investing until one day I asked him. When I went to do my very first deal, him and our realtor were sitting at his dining room table while I did laps. I don't know what I'm doing. What if I blow up my money? And I just went around and around and around the table for about half an hour. And they just patiently sat there and waited for me. Okay. That was moving from thinking about it into taking action. I did wind up putting in an offer on that property and I didn't even get it. All that fear and panic was for nothing. But I got through that mindset hurdle and moved into a completely different world. My girlfriend at the time was like, it's like you just pulled back the curtain on a whole new world that most people don't know about. So I get it. It's a journey. But the longer you think about it, go back to that slide with the different lines, right? You got to start to take action around stuff. Okay. Growth and abundance, prosperity, lots of fantastic mindsets that people share. That's amazing. It's important to be diversified. Yes, absolutely. But That doesn't mean buying a bunch of stocks or mutual funds. That means things like, I have some real estate investments. I have some crypto. I might still have some stocks and mutual funds and bonds, but it's not just in the world of public investing. It's also starting to branch out into private investing. Remember, those pension funds, I said it was still a 50-50 mix. I'm not saying you have to abandon public investing. I did because of what I was able to create in private investing, but that's the world of diversification as well. Okay. Can someone with little available money to borrow do private lending to get started? Yeah. Listen, your first private lending could be $50 to a family member. Okay. It's getting that muscle working. And there's lots of ways to create money for investing. Okay. You'd be amazed. So one of the examples that I did was there was a couple who wanted to do something different with their RRSPs. I had room on my house. So I had my own mortgage and a line of credit, but then I had more room on my house to take it up to 80% loan to value. I'm not going to explain all the details here, but they basically registered their RRSP as a second mortgage on my house. That freed up an extra 120 grand out of my house. I'm paying them 10%, but I went and invested it at 15%. Okay? So that was money that was sitting there dead in my house, not doing anything for me anyway, and could be liability if I ever got sued. And now I'm making 5% on that. It's not a huge number, but again, it's better than a kick with a frozen muckluck. Okay, that's 5% on 120 grand that I wouldn't have been making otherwise. So there's all kinds of ways to create money that you're, largely not going to hear about. Okay. I think it depends how much wealth you have. I wouldn't use an FA until I built at least 250K in invested wealth. And that might be you and your investment criteria. Somebody else could be different. With a lot of the highfalutin financial advisors, they won't even talk to you until you get into that range. So how do you get to that 250K range if nobody's willing to teach you, mentor you, or help you get into these types of things? That's where you hear that expression, the rich get richer. Right? Because they've got access to these types of investments, this type of learning, this type of knowledge that the average person doesn't have. So you got to get started. If you get value today with your financial advisor, fantastic. They're kind of like car mechanics. When you get a good one, keep them. Okay? I'm not saying that that's not possible. I'm just not a fan of the way the industry is set up, where you go to somebody who's supposed to be educating you, but they've got something to sell. There's automatically a conflict of interest there. And most financial advisors do not have what's called a fiduciary responsibility. Google that, okay? And you'll find out what I'm talking about. The short answer to that is they really don't have a mandate to do what's best for you like a doctor or a lawyer would. They can do whatever, and they don't have that fiduciary responsibility. If things go sideways, there's not a lot of repercussions for you. But if you're getting value from your financial advisor, fantastic. Okay? A lot of people aren't. Pre-construction buys. Today, they have jumped in price a lot versus 2 years ago. Would you still recommend them right now? Would you wait 1 to 2 years for material costs to normalize? So the short answer to that is waiting. The prices just go up. It's not about material costs. I did just buy a condo this summer in Calgary. It's all about future. What's going to happen in the future? It's kind of like with just buying a house in Canada right now. Everyone's like, oh, it's so expensive. Maybe I should wait. But if it just keeps going up and up and up, you're getting further and further away from being able to do that. Okay. But that doesn't mean that I'm saying blanketly, oh, just go ahead and go buy a pre-construction condo. Like I said, 95% of the projects out there are overpriced and something I would never invest in. It's about finding the right project that after you do your due diligence, you believe is going to make you money in the future. That's what it's about, not just about, let me go find any old pre-construction that comes across my desk. Okay, I am very choosy and picky, and that's why I have a whole course on pre-construction, which you're welcome to book a call and ask me about in order to how to find those unicorn projects. Okay. People are doing private lending. That's phenomenal. I do some private lending. Just want to go back and see if I've missed any. You like my kick with a frozen muckluck? Yes, absolutely. Am I an East Coaster? No, I grew up in Manitoba, actually. I'm originally from Winnipeg. I was just back there again. So if you wear mucklucks in Winnipeg in the winter, chances are they're frozen. For those of you who know good old Winterpeg. Correct. So $39.97. You're getting a 20% discount, takes it down to $3,100 and change plus HST. That's what you'll be paying for this program. That's the 10 weeks, all the assignments, the collaboration community, and the one-on-one call with me. Oh, and I mentioned I'm starting Financial Freedom Fighters. I got it started in the summer. That's like a program for after, where we're staying together. I've got videos that I share. Everybody that does the program gets 2 free months of that at the end of the program so that I can keep supporting you even after the program is over. So that just answers the next question. So 30-minute call with you. We'll discuss how to take action. So on that 30-minute call, you can ask me any question you want. And basically, for those of you who would be interested in taking this course and learning, we're going to go through and make sure you're a fit, because I don't want people that this is not the right fit for. I'm not a gym where I'm looking to have 1,000 people and hope that 900 of them don't show up at the gym, but I'm making money on that. Okay, that's not my business model. I want the right people in the course, people that want to learn, people that are open to coaching, people that are ready to make a difference in their life and start taking action. So I have some pre-questions that my COO Jody will send to everybody who books a call. That's going to give me some information about you. Then we're going to hop on that call and talk about things like mindset and, you know, what do you want to accomplish, and I'll answer any questions that you have. Okay. Yes, absolutely, with diversification. Good. Which ETFs do you recommend? You'll never hear me recommend anything. Okay, that's not something, it's not part of my style and my business way of doing things. What I do with my clients is I share what I am up to and what my clients are up to. And then I help you make a decision. Okay, I don't like this giving out, which one do you recommend? It's kind of like this. Let's say I came to you and I said, I want to go on a trip. Who asked me that? Jonathan. I come up to you, Jonathan, and I go, hey, Jonathan, I'm going on a trip. Should I take a plane? Should I take a boat? Or should I ride my bicycle? Well, immediately you're going to say, I don't know, Brian. How long do you have? Where are you going? What kind of trip do you want to go on? Like, there's instantly about a half a dozen questions that you'll need to ask me in order to make a recommendation about how I should get there. That's how it should work with investments. Okay? If I don't know you and what you're up to, I hesitate to make any recommendations. That's what I don't like about the way the financial and investment industry is set up right now. People are giving away stock tips and you should do this and you should do that. It's not the way it should work. Okay? So you want to book a 30-minute call. I'll learn more about you. I can ask you some questions, and then I'd be willing to share with you what I've been doing in terms of ETFs and funds in the world of crypto. Okay, but it's not something that I just blanketly talk about, because the last thing I want is somebody who shouldn't be investing in this rushing out and doing it just because I said so, and then they're sorry that they did. That's not what I'm up to. That's not creating more freedom for people. How much capital do you need to start off with private lending? Like I said, it can start really small and then build from there. Okay, what you want to have as a mindset, rather than, gee, I don't have enough money to get started, change that to, what can I do to start to create money in order to get into investing? When my very first business partner and I started doing this in Calgary, where I was living at the time, 17 years ago, he'd done a few properties, then I did a couple with him, and then we partnered with other people who wanted to get into investing. They were the money partner. We were the operations partner. We'd already tapped out all the money that we could invest in our qualifying power to get mortgages. So we teamed up and did joint ventures with them. They became the money partner and the qualifying for the mortgages, and we did all the work of acquiring the property, managing it, running it, all that stuff, and brought that expertise. So guess what? That's how we were able to do 25 properties, which we never would have been able to do on our own. That's what abundance and growth mindset looks like. Don't get stuck on how much money is in your bank account today. That shouldn't limit you from starting to learn and take action about this. Okay? My very first investment was $11,000. I moved into the property, so I only did 5% down. Okay? And in the end, I made over $200,000 on that investment. That's what getting started looks like. If I use my HELOC for private lending, what are the tax implications? So the good news is you will be able to write off the interest you pay on the HELOC. But yes, if you are receiving cash every month from that private lending deal, or even every quarter or for the year, you will pay tax. It's called investment income, but you will be able to balance that with the HELOC interest. So if you do it correctly, you might even be able to work it out so you're paying very little tax on that. You can also do it from your registered funds like RRSP, not TFSA as far as I know, but RRSP, yes, and then you're deferring that tax. So now you're getting the compound growth that you would get in a regular investment. Do you use your RRSPs or TFSAs for private lending? I have used RRSPs. I have not heard of a way to do it with TFSAs yet, because that's really about actually, that's not true. I believe there are some private investments now where you're working with companies that have started to become TFSA eligible, like MIX and stuff like that. So for you to do it on your own, probably not, but you can do it with some of these companies, and it does wind up being eligible. So again, there's my link there for booking a call with me. So yes, you can start to get into investing and learning about it, even if you don't have a whole bunch of capital right now. In fact, now is the time to start learning while you build some of those ideas. And I think that, let's see if we have any new questions along the way. Yes, exactly. So MIC. So technically a MIC is doing private lending. You're not the one doing it yourself, but that's what the MIC, and that stands for a mortgage investment corporation. That's what a MIC is. Okay. I believe there is also some syndicated mortgages, which is also a form of private lending, that are RRSP and TFSA eligible. So yes, you can. Okay. Using a trust company, fantastic. Love that for tax purposes. Will you... I believe this was recorded. I sure hope so. I forgot to ask Arian about that. So you can watch that. Arian, did we record today?
Recorded, yep.
Awesome, fantastic. So you can go back and watch that. I know there was a lot of information. You know, I'm trying to keep it, we're already a little bit over 2 o'clock. So thanks for those of you who are still involved. I think that covers everything, unless we have a final. Is this something you would recommend for someone in their 60s gearing up for retirement? Yeah, because you can start, you know, in that case, if you know you're going to have to start replacing income and be looking for cash flow, then private lending starts to become a possible option for you. Okay. As they say, when was the best time to plant an oak tree? 20 years ago. When's the second best time? Today. Okay. So 60s, 50s, 70s, whatever. If you can make your situation better in the next 5 years, why would you not take advantage of that? It's never too late to start learning and start implementing. Okay. So yeah, the webinar is being recorded. So I think we covered all those questions. If anybody has any additional ones, I did share my screen there with my email address. It is brianb@nlscoaching.com. You've got the link to book a call with me. I'm on Facebook. I'm on LinkedIn. I'm on Instagram as well. My COO takes care of all of this sort of stuff, so I often forget about that. Yeah, happy to communicate with you guys, touch base, answer questions, and I look forward to having some calls with some folks over the next couple of weeks and answering any questions you have, and seeing who would like to take advantage and become a certified secure investor.
Awesome. Thank you so much, Brian. That was a really great presentation and great recap on private investing and the opportunities there. So thank you everyone for joining us. If you enjoyed today's class, make sure to thank Brian in the chat room. Also give this video a big thumbs up. And Brian, it is always a pleasure, and we'll speak to you soon.
Absolutely. Thanks, Arian. See you guys again, and take care and have a wonderful weekend, and happy Thanksgiving coming up, everybody.